All right, guys. Thanks for all that. See. So, like Chris said, we're going to talk about what the difference is between investing and trading. We've been getting quite a lot of questions about this. What's the difference between what we do, what day traders do, what's the difference between an institutional investor versus an institutional trader? We're just going to discuss some of those things today. So first of all, it's worth saying that we are at LeadPath Investment Group. We're primarily investors. Okay. There's a variety of different options that we can do with our money, but what we primarily do is investing. And what that means is we want to find companies that are going to grow our money over time by growing themselves, and we're going to buy a portion of those companies. Okay, so that's why when you guys are looking, when you're doing your research, you're looking at the fundamentals of the company. You're looking at their balance sheets, their income sheets. You want to see how things like revenue are growing, their earnings are growing. And when we do all our analysis and we find a company that we think we want to own part of, we figure out what price we're willing to buy for it, and then we buy it and we wait for that company to grow over time, which will net us a return on our profit, maybe a return on our investment, maybe netting us earnings profit along the way. Trading is quite different. With trading, you're not buying a part of a company, you're buying a stock. And that seems a bit of an unnecessary nitpicky difference, but it is quite important. When you're buying a company, you care about what the company is doing. When you're buying a stock, you care about what the price of the stock is going to do for however long you're going to hold that position for. Again, into swing trading and day trading are the two main differentiators between. We run through what differences are between all of those. With swing trading, you're looking more to take advantage of news coming. Say earnings report, annual report, changes in the CEO or other executive directors. You might be looking to, if it was a pharmaceutical company, you might be looking to make money based around approvals on, say, vaccines with coronavirus or things like that. And that's a sort of period of like you take a position based on news and you hold it for a few days to a few months. With day trading, you even less care about the fundamentals than you do with swing trading, because with day trading, your positions are closed within a day. So you might buy a stock in the morning and sell it within a few seconds to a few hours. All you care about is what other people are thinking about that stock. You want to know if lots of people are going to be buying it, you want to buy it as well, because the price is going to go up and then you can sell it for profit. And so you don't even often care about what the news is. You might only care that there is some news that people are then going to be paying attention for. I've alluded to the fact that one of the key differences in these different styles of using your money in the markets is the duration that we're looking at. So with investing, because we're looking to allow a company to grow our money, we have to give them a lot of time to do that. With all of our research, we talk about where the company is going to be in 10 years' time. We're trying to predict what the company is going to be doing 10 years down the line. And we do that because we want to allow the company to have time to grow in the way we've predicted that they're going to grow, which will then grow our investment. Warren Buffett talks about his favorite holding period being forever. Like he wants to buy a company and never sell it. Now, that's not how we work. We want to buy it and sell it for a profit later on. But the idea is there that we really want to be sure that the company's going to be great into the future. With swing trading, as I say, it's a few days to a few months. You want to do this to allow the market to react to the news in the way that you anticipate and to capitalize on a bigger move. And with day trading, like I said, you don't care what anything is going on. All you care about is what other people are thinking. And those trades happen very, very fast. What sort of returns can you think about can you expect when you're doing these different sorts of things in the market? Well, we've talked about with investing, the style of investing that we do, we want to be getting 15% or more per year. Now, it doesn't sound like a lot, but over time, that really compounds and allows you to grow your wealth exponentially. The market, the US market, tends to return about 10% per year over long periods. And although that doesn't seem like a big difference from what we are aiming for, over time, that extra 5% every year starts to add up to huge differences. With swing trading, it's quite hard to give an actual exact number because swing trading covers, if from a few days to a few months, it can be very different for different styles. But a sort of number of 5% or more per month is a reasonable estimate of what you would want to be getting with swing trading. With day trading, it's even less and even more frequently. So you can see here I've got sort of 0.5% to 3% per day. And you can see the differences are primarily in the amount of return, but also in the frequency with which you're looking for that return. For investing, we're not collecting our profits very frequently. With day trading, you're collecting it every single day. But what does that return look like? Those numbers are quite hard to visualize. So if we look at them on a chart, well, suddenly it doesn't look so good for investing. So this is a sort of roughly 2 to 3 year time period. If you started with $1,000 when you're investing, you'd maybe be looking at $1,300+ by the end of a 2-year period. With swing trading, you'd probably reach about $2,000 in that time. So that's pretty good. With day trading, you'd reach $2,000 after about half a year to a year. Well, so what if this is so much better? Well, if day trading and swing trading is so much better than investing, then why are we even looking at investing at all as an option? Why are we not all just day trading or swing trading? Well, it's important to remember that these charts are only what it looks like if you hit your expected return consistently. So if you are getting that 3% every day on day trading, and that's a lot harder than it sounds. The question becomes, how much harder is it? Well, if we look at the risks and difficulties associated with these different styles of money in the market, there's a big red 90% under day trading. And that's because 90% of people who day trade lose money. They don't make money. And quite a few more percent basically just about break even. They don't really make money. They don't really lose money. And that's because it's incredibly difficult to day trade. I do it myself, and I've lost about $5,000 in the learning process. I'm still down, like I have to be in a simulator at the moment. That's because, like I say, you might sometimes close a position only a few seconds after you opened it. Your decisions are happening at a split-second basis that the human mind really isn't built to do. When it comes to swing trading, you've got a bit longer to take your positions, to plan your positions, and to execute the trades. But realistically, you're still trying to, you might hear some news, and within an hour or two, you have to decide what your trade is going to be. And that means you're still going to miss a lot of information about the company. With investing, we have all the time in the world to be correct. We can take a whole year to really in-depth analyze a company and a market and to correctly estimate the value of a company. And on top of having time to correctly analyze a company and what's going to happen to it, we also have the time for it to play out. I've talked about day trading, you have to close your position within a day. And with swing trading, it tends to be a few days to a few months. We've talked about before that in the short term, the stock market gets really wrong. But in the long term, it gets it correct. And with investing, we allow our positions to reach that correct value over time. So not only is it easier to set up your positions when you come to invest, it is also easier to be correct because you give it more time to come to correction. Aside, when you're day trading and swing trading, there's a limit on how much money you can use. So as you start to grow your account, it starts to become harder and harder to use all of your money, which means those returns start to decrease. So even if you get very good at one or two of these other things, whether it's day trading or swing trading, you still are going to end up moving those huge piles of gold coins. Obviously we don't have gold, but moving huge piles of cash into investing. So it's worth learning to do properly. With that being said, we've been thinking about potentially looking at doing a swing trading course. And we were curious whether you guys would be interested in learning more about how to swing trade and make money in more immediate terms in the stock market. Would anyone be interested in doing something like that?